Hey traders, welcome to Charts and Coffee. Happy Wednesday, everybody. Hope everyone is doing well, rested up because we still have a lot to come this week. Tomorrow we have the PCE. Friday we have Powell. Tomorrow is the last trading day of November. December is the first trading day of November. We have a lot to come. Not that we're going to in any way phone it in today. But if we think about the timing for setups to come, and if you haven't checked out the economic calendar, not a whole heck of a lot for the remainder of the day. We had GDP at 8:30, and I've been holding pretty steady on the fact that GDP is of the inflation metrics and the employment metrics. It's probably the least important because as much as the word recession gets thrown around anymore, remember that Powell and company have redefined whatever a recession may or may not be in terms of two sequential negative GDP quarters. It just isn't that anymore. So what is it, right? Now, obviously, if I'm looking at preliminary GDP and I see that the preliminary GDP is a tick higher, and it was, we are still in an environment where good news is bearish and bad news is bullish, because anything that suggests that keeping rates higher for longer hurts the economy, mostly inflation and employment. Those are the dual mandates of the Federal Reserve. But for the most part, if we are talking about good news, it is still a little bearish. We are still in that environment because basically the data can put the screws to the Federal Reserve and tell them, look, if you're thinking about holding rates past July, if you're thinking about not cutting by the time we get to the July meeting, we, meaning collectively traders and investors, will let you know how unhappy we will be. And as I've said a couple of times, I just mentioned this on Benzinga Monday, that Powell did that once, 2018. A lot of you might remember that. And I don't think he'll do that again. So let's see what happens. The data will definitely dictate it. As always, gang, the questions are the best part of our show. So keep them coming. Type them on in. And the first one that we've got is Disney. All right. Can we take a look at Disney? I hate that I missed the pullback off the daily price movement range. Hourly. On the hourly time frame yesterday. Got it. Is there a way to find setups without typing in every ticker? So Sadiq, it's basically this. I'm a big fan of, I should already have a watch list, right? In other words, if a certain indicator goes off, that should not be the watch list or the trade. So I would say two things. If we're looking at an hourly time frame and I don't know if you were looking to buy, I don't know that I'd be willing to buy yet. So I don't know that you missed anything quite yet. But if you're looking at a 1 hour and you're asking yourself on a Tuesday, as we pull back into the gray area, do you want to be a buyer? I'm not really there yet. The sell-off on Tuesday was a pretty dramatic one. And I've got to ask myself, why would I see Disney is going to be something that I would look at to compare to other names in the sector that it trades within. And I'm going to ask myself, how anxious I would be to trade a stock down on generally a day the overall markets were heading up. So let me just walk back to, before we talk about how to deal with daily price movement ranges on the 1 hour, let's talk specifically about Disney. Not super high on my list, but today we might get an inside day or a minor low, and maybe you put it back on the radar. Yes. Daily time frame actually would be the time frame for the setup, because that's in the uptrend, by the way. So just another perspective on DIS itself. The second part of your question is, anytime we have a daily price movement range, it is good for the session, right? It's got a full session shelf life. And that means that you can put an alert on the indicator itself. You can put an alert on your platform based on the price zone of the indicator. And there's a number of ways that you can be alerted to price reaching a zone in a symbol that you're watching. So I'm a big fan of having a list of symbols I am already interested in based on market structure and other factors, not, hey, the DPMR went off and I missed the trade. That to me is letting the indicator do the trading and not the trader do the trading. So just a couple of views there. And Sadiq, yeah, turn on their alerts on the indicator. And then additionally, use price alerts, right? So if you're using the daily price movement range, you're probably already aware that I'm a big fan of the platform or the charting platform based price alert, right? And then that way, whether it be on this thing, whether it be an iPad or whatever, I'm going to get alerted by my platform that, hey, that price you wanted me to watch for you, hey, it's here. And then Sadiq, what it does is just alerts you, and then you've already got the trading plan in place. All right, next up. Good morning. Good morning. All right, our next question is Mind the Gap asks, am I fooling myself to keep a December 23 put hedge on Apple? Mind the Gap, I appreciate the question. No clue, because I don't know where you put it on. I don't know what your target was. I don't know what the setup was. And I think probably the last thing, which is most pertinent, is the only hedges in my life are in my lawn. So I'm the wrong person to ask. I personally wouldn't do it. But then again, I don't know what your trade plan was. I don't know what your cost basis is. Don't know what your target was, right? So far be it for me to say it's a good or bad idea. I will tell you, I do not hedge. I do not believe in it. If there's a reason to worry about the downside, it's called a stop loss, right? And time horizons have a wonderful way of allowing us to absorb volatility. And even better than that, a longer time horizon has a wonderful ability for us to be able to take advantage of those moves that look like disaster on a daily time frame, but look like opportunity on the weekly. And, case in point, we had our weekly session yesterday in the Sector Secrets Mastery. And one of the things we talked about was XLK. This is a trade that we put on, and not a trade as much as it is a position in a portfolio designed to allow me to take advantage of a weekly time frame, but say a 6-month time horizon or more. So this is well past the 6-month time horizon. Our XLK position is now over 1 year old. It's had its first birthday. And the time that we bought it was a time that I would say most traders would not be thinking to buy. This was after the sell-off we saw through late summer, and our cost basis was about $121. So fast forward, what looked like a disaster on the daily looks amazing on the weekly. So I'm not looking to hedge these moves. I'm looking to take advantage of them. And if I'm already in the position, let's say I pull back as we did here. Let's say I pull back 30 points from 184. That's not even going to be anything more than an unrealized profit loss, not a ding on my capital. So just a different way of looking at it. I hope that helps. All right, next up is Starbucks. Sure. Starbucks is part of the consumer discretionary corner of the market. It is in an uptrend. It's in a downtrend on the 1 hour. It's in an uptrend on the daily. You might say, Rob, what's the point of keeping both of those on your layout? It's the difference between a 1 to 3 day time horizon and a 2 to 10 day. And the daily would be 2 to 10. I'd have a further at expiration. And so as I see price pull back to the mean reversion of the wave, there's a couple things I can do. One, I can ask myself, and where are my drawing tools? All right, here we go. I can ask myself, what level do I want to buy from? And the mean reversion would start at the 34 EMA high. It would go all the way down to the 34 EMA low. So obviously we're touching that most aggressive level. I'd also like to ask myself, where's volatility? And my daily price movement range is a little further inside the wave. It's overlapping very nicely, but it would be definitely another way of identifying where support can be. One is price-based. That's the wave itself. 34 EMA on the high, the close, and the low. The other zone inside of it is the daily price movement range, which is a historical volatility-based measurement of volatility-based, in this case, support. And if you're saying, Rob, it's a wide range and the daily price movement range is inside the wave, I could now ask kind of the tie break, if you will, volume. I'll go on over to TradingView. I'll pull up the visible range volume profile. I'll take a look at the last year the 2023, or I can go to December of 2023, right? I can look at 12 months, or I could look at the year. I would prefer to look at the year. Drop an anchored VWAP, drop the visible range volume profile on that chart, and ask yourself, is there volume, price-based volume sitting in that zone? And it'll give you a little bit more specificity there. So that's the way I would look at Starbucks. Daily time frame, looking for the long side, following the trend. Yeah, I tell my traders in the Sector Secrets Mastery, my entire career as a day trader, swing trader, investor is based on one very simple truth that I think has played out through the ages for multiple traders. And that is healthy trends correct and continue. Now, do they always do that? No, but probabilistically, more often than not, healthy trends correct and continue. And that's basically the touchstone. That's the belief upon which all of my trading processes are built, right? Find the trend, let it correct, take advantage of the continuation. All right, coin. Question about coin for today. Look, it's one of those stocks that's enjoying a lot of attention. I would look at volume and participation, because as you get parabolic in a trend, let me see. I don't have my trading view up at the moment. I'm going to start it here in just a few moments, though. Actually, you know what? Let me just do this here real quick. So the thing with coin, Richard, this is not about technical analysis at this point. This is not about the fundamentals or anything like that. Right now, coin is en fuego. I'm not going to try to pick a top. I'm not going to try to do anything other than find out what is a reasonable place to get long coin. I am not interested in coin. I will not play coin. It's not something that I'm going to necessarily want to do. I don't like parabolic markets. However, let's go take a look at the daily time frame. And I'm going to show you what I was talking about before. So I can go back to, here we go, 2023. This is a look at 2023. Okay. And look, this kind of goes back to Sadiq's question too, gang. A lot of traders, and there's nothing wrong with this, trade whatever is in play. It gets mentioned on television. It gets a lot of movement higher. And all of a sudden, after significant moves higher, a breakout, a big candle, traders want to trade something. But if there's anything that I can do to help, have a list of names that you are trading. It could be a list of 20. It could be a list of 120. But have a list of names that you are familiar with, that have cohesion with the indices or sectors that you're interested in, have volume and liquidity in the option chain. And you're going to find it's not a massive list if you start talking about the cohesion of index sector stock. If you like the Bitcoin narrative, it could be Bitcoin sector coin, right? So whatever that hierarchy is, and just make it a regular part of your life. And if it is, I'll tell you, the folks that have been in coin, and I can see that from the volume, are probably sitting in it at about $75, as coin was not only getting through and finding support at the 200. There's a lot of folks, and you can just tell by the volume, they're at 75. There's another huge group in around 57, right? That's the group I want to be with. And the only way to be in that group, and everyone say, Rog, no kidding, we all want to be in that group. I don't want to be chasing this thing higher at 127. Look at the volume. Do you see how that histogram, I like the vertical histogram of price-based volume. And you can see how that histogram has just about disappeared into the right edge. That means this is getting very thin. How easy is it for a thinly traded name at that price to just go whoosh and take back 20, 30 points? Really easy, right? It probably would find a little bit of support around 105. So if there's anything that I can do is say, keep something on a list all the time. Don't let 3, 4, 5 days of up moves, or it's landed on some scanner, or it's on television now. Have a list of names that you're always looking at. I know that doesn't help now, but believe me, if you start looking at the market from that perspective, what'll happen is you'll start looking at the market in a way that isn't because everyone else is trading it. It's because certain technical criteria that have mapped out over time to be really consistently helpful is in play. And that 200, gang, is amazing. And if that 200 is a company with volume, Yahtzee, right? So coin for today, honestly, I have no clue, probably up, but I'm zero interested in it. And the only way that I would play it would be shortening the time frame, because as we're getting into rare air, the nosebleed seats, it could continue higher, but it could also pull back very quickly. So be nimble, maybe a 1 hour if you want overnight exposure, or just day trade it. So that's the way I look at that, gang. Okay. And by the way, do I have to say, nobody knows what's going to happen today, including me. But if we play the probabilities of the trend that's active on the daily and the hourly, probably higher, but the 5-minute right now is relatively weak. We'll see what happens at the bell, but I would need a pullback, right? I would absolutely need a pullback before getting on that ride. If I were, I want to be perfectly clear, I will not be. QCOM, thoughts on that? Uptrend, buy the pullback. And by the way, gang, does a pullback always have to be the 34 EMA wave or the daily price movement range? It does not. In this case, there's a couple levels here that are on my radar. One could be the low from the 14th or the 21st of November. So between the 14th and 21st of November, there's a nice little zone. That would be one level. However, if you're looking for a gap close, I would keep an eye on about 124. So it depends on how far a pullback you want to take advantage of. Do you have to wait for the wave? No, you can take advantage of the support and resistance of the gap, maybe take advantage of a gap close. If you want something more aggressive than that, again, take a look at the low, the wicks on the 14th and 21st. That's the way that I would do it. All right. All right. Next up is Green Eggs and Ham asks, is the gap up for selling good GDP report and market stretch? Green Eggs and Ham, is gap up for selling good? I'm not quite sure what the question is. Is gap up for selling good GDP? If we're getting a gap, remember that's only an SPY QQQ phenomena. Remember that the futures were trading through that. So I'm not a big fan of gap fades. I'm not a big fan of doing anything other than acknowledging that the gap is there. So is the question if I would fade the gap? I'm guessing. So if the question is, am I going to fade the gap? That's only if I get the setup on the 5-minute time frame. Let the first 5 minutes find their range, and then I'll determine whether or not we're breaking support that would merit coming back down to the previous session close. But remember, gaps are only going to be visible on those 9:30 to 4 symbols, and it's not a big priority for me usually. Green Eggs and Ham, it's not usually a big. So are you asking about a gap? Oh, gap the stock. Okay, well, all right, let's try that again. Gap the stock on GDP. All right, sorry about that. So let's try this again. So by the way, is gap up for selling? I still don't understand the question. My friend, I still don't understand the question. You're asking me if there's a sell setup? I have no idea. I don't trade gaps. So, but let me answer your second question there. Which anchor on the VWAP and TradingView do I use? So Green Eggs and Ham, where do I anchor it? Just use an anchored VWAP, right? Just use an anchored VWAP. And it depends on the time frame, right? If it's intraday, I have a time-based. If it's end of day, one of my favorite and one of the basic ones you can use is the first trading day of the year. Stephen asks, what kind of option strategy do I use to hold for longer than a month? I just buy calls and I just buy puts, Stephen. I'm not a big fan of multi-leg strategies. It's just not the way that I like to operate. I'm a directional debit player. So if I want to hold longer than a month, it's not really the option strategy that dictates that at all, Stephen. It's the time frame that I'm setting it up on. So if I'm setting up a daily time frame, there's a chance that I could have 21 plus days to expiration, right? I'm not going for the time. I'm not going for, hey, I want to be in the position for a month, unless I'm looking to set up a particular event, right? If I'm looking for a rally into earnings, if I'm looking into a rally into an FOMC meeting, if I'm looking for a rally into non-farm or whatever it is, it could be a sell-off too. But if I'm looking based on a particular event, that's one thing. If not, if I'm looking to hold for longer than a month, it's going to be a daily time frame entry. So it's not the strategy, it's which time frame am I looking at. All right. Walter asks, this will be the last question of the morning. Does the 30% off for the daily price movement range apply to just the first month or every month until canceled. Walter, I don't know for sure, but no, we don't lock you into 30% off. No, if you buy 1 month, it's 30% off that month. If you buy an annual, it's 30% off, I guess, the annual. But no, we don't lock you into 30% off. It's just for whatever amount of time you have bought it. So if you buy a 1 month, 30% off. If you buy the annual, 30% off. Yes. Okay. All right, gang. As always, thank you so much for being here for Charts and Coffee. I will see you all tomorrow, same time, same station. I'll see you all in the Sector Secrets Mastery and in the options room in just a moment.